Mr. Taylor, thank you very much indeed for coming to speak to us. Really appreciate your time. So right now we seem to have a situation where contagion concerns are mounting in the Eurozone, concerns about the crisis spreading to those core countries, Spain, Italy, even France. So why is the euro so resilient in this environment?
Well, I think the primary reason is because the US dollar is so weak. And of course, Trichet is continuing to raise rates, and that has some impact as well.
At what point will the euro be affected then?
Well, I think it will be affected when this crisis has its next leg, which we would expect to see come in 3 or 4 weeks' time from now. And if the numbers from the European group, the Eurozone group, start to look a little worse in August, I think the euro will have a very, very bad September through the end of the year.
So when you say 3 or 4 weeks from now, is that when we might start to see a sustained drop in the euro below the 140 level?
Right, yes, I think so. I mean, basically, you have to make a little bet that the Europe, and I think the market is making that bet that they're going to have this meeting, and that meeting is going to reach some kind of an agreement that's going to prop things up for a while.
Could we see the euro touching its low, about 132, which we saw in early January?
Yes, I think so. I think I'm still believing the euro is going to go down a great deal, and I think a conservative forecast is 115 to 120.
That's conservative
sometime
forecast.
Next year. Yeah, and my more aggressive forecast is going to go to par.
Okay.
I mean, it's a very strange situation because Europe would be well served by having a much weaker currency. It's only Germany that needs to have a stronger currency.
So do you think Europe is going to get its act together? I mean, from what you're telling me, it doesn't sound like it. What are your thoughts on the debt crisis and the way things are playing out since you got here from the US? Tell me about your observations.
Well, interestingly enough, and my meetings with financial and general business people, in France, is that everybody believes that this situation is impossible and that it can't go on. They look at the French situation personally, but not publicly, and they think they're in a very bad spot.
So the people that you're speaking to are very worried about France?
Right, yes, yeah.
And how do you think that could potentially impact the euro if we have this big summit in Brussels tomorrow, European leaders, if they fail to come up with a comprehensive solution? How much does that endanger larger countries like France, and then what does that mean for the euro?
Well, I think that the euro has to be restructured, and not just a little restructured, very, very significantly restructured to make it work.
In what way?
Well, I think it needs to become a transfer union, which of course is an absolutely horrible thing for the Germans to hear. But there's no other way for that to happen. Yeah. You cannot have a situation like this where you just loan them more money and expect them to pay it back, because they can't pay it back.
Yeah, it's not a sustainable situation.
Right.
But it sounds like you would expect domestic opposition in countries like Germany if we started to move towards fiscal transfers. Is that right?
Oh yes, absolutely.
Yeah.
Tremendous. And I think the real issue about this, we have the leaders who tell us all the time that they're absolutely committed to doing this, and that Europe is the future, or whatever. You really have to talk to the man on the street, to the electorate.
So those comments don't do anything to reassure a guy like you?
No, I'm much more nervous, and I'm reading the Greek newspapers and talking to people in Greece as to what's really happening on the ground, right? And we have a Greek election, a referendum coming in the fall. How's that going to work? I think we're already beginning to see the positions being staked out by Papandreou and Venizelos that are perhaps going to lead to Greece leaving the euro or something. And
what are the implications of that for the common currency?
I think if Greece leaves, that will be fine. Everybody will say, oh, that's wonderful, that's good. Unfortunately, there are a couple of other countries that are going to go right after them.
And they've also been talking about the prospect of expanding the scope and remit of the EFSF, the temporary bailout fund, that would include buying bonds on the secondary market. Would that be a good thing in your view? Would that be a step towards more of a fiscal union, if you like?
Yes, it is. It is, and but it needs to be a big bang. It needs to be 1.5 trillion or something, right? And then they have to write the checks for that 1.5 trillion. It can't be done like some kind of a cloud, and we really don't know what's going on underneath it. There really has to be, the governments have to stand behind these deals. And then there are all sorts of ways they can do that, but all of them involve some kind of a fiscal union.
Would that be good for the euro?
Yes, that'd be wonderful.
Yeah. And also, what about the interest rate differential between the Eurozone and the US, which has actually supported the euro through the debt crisis, as you well know? Is that now starting to erode?
Yes, well, it hasn't really started to erode yet, but will erode because of the changing shape of the yield curve as you go further out. Europe is going to lose that advantage as well.
Yeah, so the gist of what you're saying is the euro rally that we're seeing right now, it's a temporary thing. We're on shaky ground at the moment.
Right, and I think what's really surprising is that what's happening in the United States, I would argue, is very good.
For the euro?
It's good for the dollar in the long run.
Yeah.
Because all of this hoo-ha in Washington and arguments and battles or whatever will make it so the U.S. runs a smaller deficit and looks to be a more fiscally prudent alternative to the euro.
I mean, on the off chance that we do get a second bailout for Greece sorted out, could we then see, even if it's only temporary, potentially the fiscal spotlight shift to the U.S., and would that put pressure on the dollar? Yeah,
I think it's quite possible that we see pressure on the dollar for the next few weeks, because I do believe that something will be worked out on Thursday.
Even if something is worked out, even if they do reach an agreement to raise the debt ceiling before the August 2nd deadline, long term, should we still be concerned about the sustainability of the U.S.'s top-tier credit rating?
No, I don't think we should be.
Why?
They print the money that makes the world go round, you know. It's only when there's an alternative currency to take the U.S.'s place. But even if the U.S. has a single A, it still will be the currency that everybody is pegged off of. That means really everybody else is worse. It's not a situation where those A's make any difference.
What does this mean for the dollar then in the long run?
If they have a lower, I think you have to be optimistic about the dollar in the long run.
Yeah.
If the Washington consensus that deficit reduction is critical holds, and I believe it will hold for a while, but we haven't seen the U.S. go through a big recession, and in fact it's going to go through a recession, and so partway through next year we have to see, oh my gosh, are they really going to agree with what they said, or are they going to pull the ripcord and start to print money again?
Yeah.
QE3 and all of that.
I mean, talk to me about that. A recession partway through next year, what is that going to involve? How bad is it going to be? How's that going to impact the markets?
Well, I think the recession is going to be worse next year than the recession was in 2008. And why do I think that? Because there aren't any more gimmicks that Washington can use. They can't lower interest rates. They're already at zero. Yes, they can maybe make them flat further out the curve, but guess what? That has almost no impact, right? The fiscal stimulus side is pretty much blocked. Certainly it's blocked in the House, and you're going to have to scare an awful lot of Tea Partiers in order to get that thing turned around.
So you don't think there'll be QE3?
Yeah, well, I do think there'll be QE3, but I think it'll come fairly far from now, and by that time the red lights will be out all over, and everybody will say, oh my God, unemployment's 11 and it's getting worse, and we've got to do a QE3, and the Tea Party be damned.
And so by the time they could potentially reach an agreement on QE3, you're saying it would be too late to actually have a significant impact, because, well, already we've seen QE1 and QE2, and growth is still not what it should be. Unemployment is high.
Well, I think what the QEs do is they take negative growth and turn it into zero. So they have an impact. But the problem was QE1 had quite a good impact because we took negative growth and turned it into zero plus a little bit. QE2 did nothing, in my thing. QE3, when it comes, it'll take negative growth and turn it into zero, so it'll have a big impact.
Okay.
But it won't really create growth. It'll just, it creates final demand. But the government creates final demand, right? Like it did in the Depression. They send people out to dig ditches or build roads as they did in Japan, right?
But if we have no QE, what does that mean? What does well and what doesn't? It's good for no QE is good for the dollar, right?
Right, yes.
Right.
Exactly, yeah.
And then additional stimulus will mean, what are the implications for the dollar then?
It'll probably take the dollar down. But when the dollar is going down, if you do an analysis, a regression analysis, a weak dollar is good for the economy, the global economy. Because we're printing a lot of money and it's going out and it's, juicing all the markets and making things good. So when the QE3 comes, then we can say, oh, now the global economy is going to pick up.
It's a really interesting environment that we're in right now because you speak about the importance of there being a lower currency, and it seems to be what everybody wants right now because it makes life easier for exporters and it helps to boost economic growth, really, whether you're talking about Europe and the US. But then to some extent, does that go against the natural instinct of strong economic growth, strong country, strong currency? Does that complicate things for a guy like you?
It certainly goes against the natural instinct of Europeans. Right, of Trichet and the Bundesbank and everybody like that. But in fact, if you analyze even the way people went through the Depression, it's the countries that went off of gold first that had the best ride, right? They had lower problems with growth, less low growth, less unemployment, all of those things, right? So you really want to, in this kind of a situation, you want to have a weak currency.
You want to have a weak currency, but then how much does that complicate things for you in terms of where do you put your money right now?
Well, that does complicate. There are plenty of places to borrow money from because they're going down, but how many places do you want to put it? Well, one of the places, obviously, is in commodities and gold and things like that.
And we've seen gold reach a new record high above the $1,600 level. Do you expect it to go a lot further than that?
Yeah, we expect the 1900 by let's say October.
And what will that be fueled by?
By the fact that we're having a little bit more growth and Asia's still going along and the dollar's not really looking so good. And it depends a little bit on the Europeans stitching together a deal that lasts for a while. And then we get into trouble when the Greeks come in to have their referendum and they vote out Papandreou's ideas.
You mentioned that we'll see a recession in the US partway through next year that will be worse than anything we saw in 2008. What about Europe and elsewhere in the developed world?
Well, when you do what the Europeans are doing right now, you have to have a recession. It's just written. I mean, already you have Northern Europe growing at a relatively low rate, except for Germany, and you have Southern Europe, which now the question is, do you include France in that, declining. So if you were actually to look at Europe, it's almost 50% is a negative growth already and is already in recession, and 50% is doing okay. Net Europe is struggling along. So, but you can't say that net. I mean, the Greeks are doing miserably and they know it, right? And they don't care whether Germany is doing wonderfully. They know when they drive home at night how bad their day has been at work.
Okay, well, John Taylor, really interesting to talk to you. Thank you so much.